And good afternoon. This is the Eye of the Storm podcast with the Elliott Wave Weekly Update for gold, silver, and platinum, being recorded on Sunday, September the 28th at 12 noon Pacific Daylight Time. I'm going to start with gold, and I'm actually showing my maximum monthly chart. The data that I have here goes back to 1975, and we know that there's a great deal of data prior to 1975, but that's what is available to me here on Thinkorswim. So my count, I'm showing that. Well, actually, let me just start from a level that I think people understand. When I was learning Elliott Wave and I was learning to apply it to the precious metals, it was suggested to me that most of the precious metals, really, you don't count above uh, like a cycle degree. And the reason being that they move in cycles, and they move in cycles basically where they could put in a 535 or those types of patterns, but they stay more to what we would consider corrective, even though they're not. So it's like in an equity market, we have data that goes back, and so it's constantly building from a very high level. So, for example, in the Dow, we have data that suggests that we're already within a grand supercycle, which is the top level that Elliott gives us to in the equity markets. For example, in the Dow, in the S&P. So we do have data, very, very long-term data, but you have to compile it from several different sources in gold, in the price of gold, what's happened to gold over decades, over centuries. So, but still, the cycle that gold trades in is not one that consistently builds from one level to the next level to the next degree up to the next degree up, that it normally is much lower. So I'm sticking to a cycle degree in gold because that's what seems to work. But I have initially listed this as cycle A, cycle B. We're in a cycle C, and it was suggested that I change it to cycle one, cycle two, or in a cycle three. I may go back. I'm doing it this way because I think because of the extensions that we're getting in this particular rally phase, in this bull market phase that we're now in within gold. And so I feel it is on a cycle degree, but I think either this is going to be a third wave or it's going to be a C wave. And if it's the C wave, it's still going to have the same power that we're showing right now, but it's just going to be five waves up of primary degree to form the cycle C. And so leaving it that way, it doesn't make any difference what I put there. We are in a primary third wave, right? So we've come up primary one, primary two. We're in primary wave three. Going to be inside there, five waves of intermediate degree, of which we have one and two. So we're in intermediate wave three of primary wave three. What's going to be inside intermediate wave three? Five waves of minor degree, of which we have one and two. So really what I'm demonstrating here is what gold is demonstrating is that it is subdivided once, twice, three times, four times. Clean four. So we're down to the minute degree that has subdivided into. And so we're in minute wave three of minor wave three of intermediate wave three of primary wave three. So I'm going to start breaking this down now. So we're going to go from that monthly. We're going to go to the 20-year weekly. I believe that's what I've got up. Yep, 20-year weekly chart. And so again, there's the primary, the intermediate, the minor. And so here we are in the in the minute third. And that's the one I think we're getting very close to completing now, minute wave three. So I'm going to break it down out of there. I'm going to go down to the 5-year, and now we're going to go dig inside this. So here we have the minor two, and then we got minute one, minute two, and now we start to break down. And it's all within that minute wave three. So first up is going to be, of course, the minuet degree, of which we have one, two, three, and four. And a nice little triangle right there for wave four. And now we've launched higher out of that in a minuet fifth wave. That minuet fifth wave is going to complete minuet five, minute 5, excuse me, minute wave 3. So it's going to complete minuet wave 5 and minute wave 3. Um, and once that's done, I am looking that gold is likely going to move through a little bit larger of a correction over what we have seen recently. But first, before we get there, we're in minuet wave 5 up, and there's going to be 5 waves of sub-minuet degree. So let me break this down, bring it to the daily chart. Here we have, there is minuet wave 4. Here is the 5th wave in progress. 1, 2, 3, and 4 complete. So by my calculations, we are in sub-minuet wave 5 of minuet wave 5 of minute wave 3. So here are our markers, fib markers for those waves. First off, we have sub-minuet wave 5. Well, we have that 6.618, where wave 5 would be equal to 0.618 of wave 1, and that comes out at 3804. That's been exceeded, but I'm leaving it there because it continues to drop back below and should find, again, maybe some small resistance there, but more of what we're looking for, since we're looking for this 5th wave to complete, and that's the one, once it's done, will complete the others in succession, and that's going to go sub-minuet, minuet, minute. So here's the minute degree, and here's the minuet degree. So I think we have a nice little cluster right in here that goes from 3835, 3875, 3895, 3900. And that's where wave 5, 3895 is where wave 5 would be equal to wave 1, most common. The next one up would be 0.618, or 1.6, excuse me, 1.618, and that's 4,043. So yes, I have been expecting that we might get up, or we should get up before this is all said and done. We should be above 4,000. Whether we do it now is going to depend on the stimulus that's going to shove this market higher, that has been shoving the market higher, and a lot of that is around the dollar and Bitcoin, actually. So if the dollar continues to decline, I think that we will stand a good chance that we're going to get up there and finish this 5th wave. Now, was it going to extend beyond 3895, get above 3900, and head towards 4000? Sure, it's possible. Do I look for that? I can on a fib basis. I can see it, but what's going to be more important is the actual structure. Now I'm going to bring this down, and I'm going to look at our 1-hour chart, and we're going to go inside this 5th wave. See, I can basically almost do 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. You could almost declare it could be done there, but we're starting to head higher again. Instead, I think when it's done and I'm putting a 5th wave and another 5th wave and that minute 3rd wave, that we're going to start to tumble. And I think that we will very quickly form 5 waves down. Because gold, actually, I'm going to go all the way back out to that maximum monthly chart. That's what I wanted to show you. Here we are on the maximum monthly chart that I have. So on a monthly continuous chart, we are pretty overbought. In fact, this is the highest that we've been since 1980. Kind of equaling 2011 here, well, sort of into 2011. We're sort of equaling again in June of 2020, but we're above all those, and the only one that was slightly above or higher than this was 1980 on that spike. So possibly we're going to get one more spike, which could shove this all the way up to, let's say, the 90 level, which would be extremely overbought. And it's setting the stage for when minute wave 3 is done, that we likely are going to kick it off with a day or two, or even a week or two of gold dropping $100. So what does that suggest? Taking this back down, going back up to the daily chart so we can look at this thing. Once we get minute wave 3 in, Elliott again left us the guideline that a 4th wave, once in motion, will normally find its endpoint, its terminus, within the price territory of the 4th wave of 1 lesser degree. Well, if we're coming down in a minute wave 4, 1 lesser degrees minuet, and there's the 4th wave. So while we're going to be actually looking at running a fib from there all the way up to where that top comes in. And I think, yeah, we might get down to this level, 31, but more than likely, we're going to start with something around the 3,300 level. Now, if we're up to 3,900, we're up to 4,000, that's still a pretty hefty decline, right? That's a pretty hefty correction that we'd be looking for between 600 and $700 drop in the price of gold in a corrective and in an ABC structure down. We can run it down even further. Excuse me. My voice starts to crack and then I have to stop and sorry about that. Um, but we'll be looking at connecting the bottom of wave two to the top of where wave three comes in. And right now we can run a simple fib and it's going to just be retracements. And let's take it up to that 100% level, which is pretty common. So we can see 236 is 3,400, 382 is 31, and that's right there. So again, the low of the previous fourth wave. It is going to be the A wave, not the E wave, even though that's where wave four completed. So we have 33. So I'm going to say that once this minute fourth wave is underway, our levels are going to be 33 to 31. And then we have 382 just below right there at 31. And that is the most common for fourth wave. So you can see how I'm lining this up already. And that's a little bit larger than what we've gotten thus far because we've been still surging higher. So again, when we put this all together, this has been one glorious move up. And it's in this particular third wave started in October of 2023. So it's been in motion for going on 2 years. I mean, can't forget that October the 1st, and we're looking up there, that's October the 2nd right there of 2023. October the 1st of 2025 is Wednesday. So Thursday, we top, possibly. And then it is a clean 2 years in progress. And a lot of ground has been captured here. We have to think that that low was 1823, and we're trading at 3,800. What a rally. It's been really a strong rally. So pulling back would be great. It's needed. And we need to get, even on this weekly chart, we're overbought. Not as high as we've seen in the past, but we're still overbought. So I think we need to kind of pull it back, and those are our levels. Now, bringing it back down, let's take it back down to that hourly chart. We want to just kind of figure there's the three, there's the four. And so there's one hand that I could say that this could be the three, and here's the four, and we're kind of doing 1, 2, 3, 4, and a five. So I'm really kind of looking that we has a very good chance of getting and spiking up because we can't forget that it's normally the fifth wave, no matter the degree, it's the fifth wave within gold that tends to expand, to extend. The third can and the third has here, but it's the fifth that sometimes we get those stronger moves. It comes within the fifth wave. And so that would make sense here because this is a fifth. So I think, yes, we can start to find and maybe even complete this sub-minuet wave 5. Then we have the minuet wave 5. So once we can get sub-minuet wave 5 to complete, in succession, it's going to do the sub-minuet wave 5, the minuet wave 5, on up to that minute wave 3. So we get all of those will compete. But these are just fib levels that are sitting there waiting. So not necessarily that they're going to get up this high, but if wave 5 goes the full 100%, they will. Then we're going to be looking for 3,895 to 3,900. And then we already know we've got additional on the minute degree at 3835. Then we have additional on the minuet degree, going one down, at 3876. And then on the sub-minuet degree, we have 3895. So we have all levels all the way up. Now, whether it breaks to 39, I think it's just going to depend on how strong that final push is going to be. And all kinds of things have been going on at that time. So we could see a lot of things happen. So I think that gold is getting ready to top in that minute third wave. I'm just pulling it back out to the daily. It's going to be that minute third wave. And I got to pull it out even weekly. We go to that weekly, the minute third wave. That's what we're getting ready to complete. And I think it could happen next week. But we'll see. I don't want to jump the gun, but you can see there's the third, very strong. In fact, this is just incredible because it's just kind of continued. Kind of put in a quick 3-4, and it's just continuing to move higher, at least on a weekly chart. So very hard to discern where one ended and the next one started. So I'm looking for that also just to continue to complete this third. Again, once we're in that and we have that fourth wave in place, we still have a minute fifth wave up. And again, moving out one more to here, that minute fifth wave will be then completing the minor third wave. So we go through that whole corrective process again. We finish with minor three, then, and let me see where we got. See, we got those way up here. 43.66 to 46.40. Those are big numbers, but it's very possible. And then we start to pull in our others, and this is intermediate, and this is the primary. So we're starting to get to where we could possibly start completing higher up. And at least that would just be, see, if we're finishing the minor third, that comes up next once we're done here with the minute three and minute four, and then the minute wave five. Then we're finishing the minor wave three. We get a 4-5, and we're finishing intermediate wave three, a 4-5 on intermediate degree, and we're finishing the primary wave three. So once all that is done, then I think the cycle is going to be done. So we're going to get 5 waves up a primary degree, and I think that's going to finish us in terms of the cycle, and then we have a much larger correction. Where is that going to end? Well, I can additionally put the next level up here, and I have 5.618. That's already there. I just got to go find it. And where did it go? That's interesting. Because all I see is 4.618. Let's just say, oh, that's because I put it in wrong. That's 5,000. That doesn't make sense. Let's go try that again. There it is. So we do have here, but we've been calling for 5,000 for quite some time. The primary degree suggests that's exactly where it should go. And then that third wave is just going to be multiples. So it's going to be 5.618 times the length of wave one. Big. These are big. And again, we're talking this. We probably will get over this particular overbought, bring it down in a correction, but run it back up, and it'll get super overbought yet again. But people say, well, what's going to do? How is the price of gold going to get up there? I was like, there's so many different situations that could fall into place that could really create this movement into safety, right? The safety of gold. Gold has always been a storehouse of value, so therefore I don't see any other that actually stands up in that fashion. I mean, we have people that say, they run to the safety of the treasuries, the bonds. Well, if part of the problem is going to be that the economy and the debt is out of control, and therefore bonds are not really flying higher, to go throw your money there as a safety point won't have as much favor, I suppose I should say, or desire as gold will have. Gold, silver, platinum, those, the precious metals will have. So I think there's still a lot of upside room, obviously, to go. To recap just very quickly, I think, let me get out of that one, come down to this three here. I think we're getting ready to put the sub-minuet wave 5 in, the minuet fifth wave in, and that minute third. Then we get a little bit larger correction. Our initials are 33 down to 3,100. That I think is going to contain that fourth wave. And just on a fib basis, we already laid it out. If it gets to 38.95, so it doesn't get above 3,900, then 38% retracement, most common for a fourth wave, and it happens to sit and fit right in with the previous fourth. So I'm going to leave that as is. Moving averages, of course, are still just bombing higher, so that all looks really good. Let's go over and take a look at silver, which also has just been dynamically moving higher. And this is what I talk about. Here's the fifth wave. See how it suddenly just starts to surge, and we're just kind of blowing through these levels. This is when silver gets interesting. If I pull it all the way out, and I'm going to look at that maximum monthly. What have we had? That was a surge in 1980. This was the surge 2011. So this is the next one. This is this, and it fits. Not that there's the time factor in between, but what are we seeing? Look at this. It's surging here within this minute third. And so we've already broken above the above 46 and almost, well, we hit this resistance level, which is for the intermediate C wave. I'm going to bring that down now and let's take a look at 3 year, right? Still, for this intermediate wave, it's only 1.618. So therefore, I think it'll be exceeded. And so we're not finishing the intermediate third wave up here. There's too much in between. We still have to go here to finish the minute third wave, come down into minute wave 4, which see, here's the part that I'm going to say it starts to get a little bit not out of hand, but a little bit, we're going to get that bigger correction. That's what I mean. We're going to get a little bit of a larger correction here. Previous fourth, right, when we finish up here and we finish that minute third, and we're coming down into minute wave 4, there's your marker. There's your initial marker, 36. Well, we're at 46, so it's a $10 drop in the price of silver. Pretty large. That's a pretty large drop. And I want to just make reference again, back out here, to these surges. When we got these oops, I didn't want that. I just want to go this way. Let's look at this one. We surged up. This is all in a month. This is a monthly maximum monthly chart. We surged up in the month of April in 2011. Then in the month of May, we fell apart. We surged lower. So again, if we're not done surging and we kind of go up within this minute third, then I think, I'm going to have to, I'm not sure how, but I think we could go. And after 46, yes, we have continued to 48, 49, and then 50, and then 51. So there's been calls for, 51 up to 60. I got us covered up on a fib level up to the primary degree up to 58. That's not unrealistic if we continue to surge. In other words, it just outdoes the surges here. And I could go back now. Get out of my way. Go, go. And if I go back out, look at that surge in 1980. So let's see, that took place in, come on. Oh, it's so hard to get it just to sit there. Yeah, there we are. In January of 1980, the market went from 30 to 50, so it's $20. And but there was a whole other reason out there for those of you that are old enough that actually maybe we were around at that time. The Hunt brothers, right? Big traders back in that day, uh, were trying to corner the market and got squeezed. So we surged up, and then it took, actually, it's the second month after hitting that high that the market just really started to fall apart. And it reached a high of 37 and the low is 19. And then, of course, the whole move took us all the way back down to $3, almost four, just below $4. and that's where the market bottomed, so 50 to $4. And then we built all the way back up. We started to surge back in 2008, and then it was up to 2008, and then that was the decline, the great financial collapse, and then we started to surge again in 2010, and then 2011 did the big move that didn't quite make it to 50, got close, but didn't quite make it. This one I think will. So I am looking for new all-time highs, and it's going to be in a primary Y wave. So I have WX. I'm looking for that Y to take us up there. And boy, we were surging. We were surging last week. So let's kind of dive into that one. And here we have 1, 2, 3, 4. We're in the sub-minuet wave 5, and that's going to finish the minuet wave 5, and in turn, the minute wave 3. So again, I believe we can get up above 46, but I have additional resistance for sub-minuet wave 5 at 47.60, and then I have it again at 48.20. And then on for the minute degree, my next level up in terms of Fibonacci resistance is coming in at 48.56. Doesn't mean that it's going there. I think we have these other levels that are going to probably provide stronger resistance. Right now, it is this intermediate degree resistance that it reached on Friday, and that was 46.96. The high was 46.94, or almost 95. Pretty amazing. So pretty much hit it on the nose and kind of just backed off a little bit, not by a whole lot. Closed Friday at 46.36. So I think we could surge one more time, and then we have 47.61, 48.18 to 20, and then we have a little bit more for the minute degree at 48.48. Can we hit 49? Yes. Big round number 49. And then we're talking about the minor degree resistance starts to kick in up there. So we got some numbers that should show that we're going to go through them before we're done with this level or this level. So I'm expecting, again, we will get to new all-time highs in silver, I believe, and it's going to thrust itself up there. For whatever the reason is, that seems to be the method that the market uses. So right now, though, I am thinking, and I had thought 46 in this area, we may actually make a run for 48 to 49 before we finish this fifth wave and before we start to pull back in that minute wave 4. So again, we're going to go up. We're finishing the sub-minuet fifth wave, the minuet fifth wave, and the minute third wave. And once that minute fourth wave kicks in, there's our point. There's our initial point is 36. So if we're running up to 48 to 49, we're talking $12 to $13 above where the market, I believe, can come back to. Because the fourth wave of one lesser degree is sitting right there where my cursor is. Right there. That's the fourth wave right here. And so, yeah, we're looking for this to come back towards the bottom of it. That's 36. Again, in terms of silver itself, not a bad level. Now, if our count is correct, then I'm going to be finishing a minute fourth. I still have a minute fifth wave to go up. Is that the one that's going to take us above 50? If right now, if I had to say, I'd say, yeah, I likely will. But we're getting a chance to review all the market conditions, everything else that's going around as silver at the same time before we determine. But I think I'm looking at my daily chart. Yeah, I think that we can. And I think we can get above 50. And I think we can get above 51. Right? We have the numbers up there that could do it. But we're going to be going up at a minute fifth wave, right? We've finished the minute wave 4. And wherever we start from, we're going to be looking for that minute wave 5 to take us back above wherever this third ended. Right? So whenever minute wave 3 ended, whether it's here, here, or here, that minute fifth wave, we're looking to get above it. And that then will finish the minor fifth wave. So we get the minute fifth and then the minor fifth finishing. And then what do we have? We will likely be finishing all the way up. All right, so let's review that one more time. Let me go out here to see. I've got to go out actually to here. See, because what we're finishing up here, first of all, we're finishing on an intermediate degree in a C wave. So this, once we finish 1, 2, 3, 4, and this minor fifth wave up, that minor fifth wave is going to be completing the intermediate C wave. And intermediate wave C would be 1.618 times the length of intermediate wave A, and that comes in at 4670. We've already been touching it. So the next one above that is 1.882, and that's at 5179, 5180. And we have clusters from the minor degree of clusters from everything else, all sitting up in there. So that might be enough to, we get that minute 3, we get the minute 5, and then it comes back up into this area. It gets above 50, goes to new all-time highs, finishes that fifth wave, finishes the C wave. And once that's done, folks, we're looking at the same time that it's going to be finishing the primary wave Y. So these pushes are going to be important as to where they get to. Because once we get here, I can go further out. I can go here and I can put up 2.618, which is out there somewhere. Yep. And let me just see where those are. There's 2.618 is at 65. So we have the fibs. We have people saying, oh, maybe 80, oh, above 50, oh, above 58. Well, we've got the fibs, and I think that's how they're coming up with this. Doesn't mean that the market's going to go there, but that's at Fibonacci resistance on the intermediate degree C wave. And this is where intermediate C would be 2.618 times the length of intermediate wave A. Now we have this X wave, and so what we're really looking at is comparing. I got to go all the way back out. Where we're running that from, there's the bottom of this particular wave. And now that's the start of the C wave. So I'm running it up there to down to there to the X wave so I can get an idea of where I think this can come in. And I have 57.95. Now, whether that's accurate or correct, that's a tough call. But I'm going to leave it as is for right now. So we will be finishing all this. So we're not that close because we still need to get the minute wave 3 and then minute wave 4 and then the minute wave 5 and then the minor wave 5. That's the one. Once we start getting up there to complete minor 5, it in turn will complete the intermediate C wave, which in turn will complete the primary Y. These are just markers, folks. So I do believe we will be making new all-time highs above 1980 and definitely above 2011. So all in our future with silver. Just to bring it down here one more time. See, those are the levels that I'm going to look for to complete 5 and then 3. And then we'll see what that fourth wave looks like. All right, over to the surprise for me within the precious metals, and that was in platinum. Platinum, just like, I'm very glad that I gave the alternate last week when I was talking about platinum. And I still felt that this was all coming up in 3, but I talked about that if it really came up and went above that high, which was a 1465, that it's likely going to surge through it and keep going. But that would break the pattern and put this minor 4 right there. And that's exactly what happened. So that's exactly what I'm doing. I am putting wave 4 here. And so that puts us in a minor fifth wave, which we've already reached 2.618. 1600 is 2.618. Now we have to think about what do we got next? We're working an intermediate C wave up, right? Let's take this out one more time. Let's go to the maximum, right? We're primary wave A. So we're looking for a primary wave B. Well, we've already gone through that 618 pretty much. So I'm going to take that off for right now. And take that one off, and we have two more there. I'm going to leave those up there for right now. And so, being that it's a B wave, I'm not necessarily looking for it to get above the all-time high, which is 2003.09. It could equal it, or it can get close, as we're seeing here. So again, what do we have in terms of the C wave? Well, we're pumping up higher. Now I got to bring it all the way back down. Let's take a look at the daily, right? So what we have is this very strange looking. That could be the one, that's a two, and then one, two, three. That's a four, which is kind of not good. So it would be one, two, one, two, one, two. And so this is a three of the three, right, inside of all of this. That's one, that's two, one, two, one, two, three, right? And whether that's actually going to put in the four, I don't know, because, it's just kind of black holes I got everywhere. It's like, okay, what do we want to do? But if I had to put one, two, right? So we have this little bizarre diagonal for wave one, then we had wave two, and then we had another one, two, and then we had another one, two of three. So this is subdividing. So this would just be finishing wave three of this larger third. We get a four and a five. That's going to complete this three. Then we get another four and five. That completes this three. So, we got a ways to go. So again, here are some markers for that minor degree, as that's the fifth wave that we're going to be completing, this fifth wave, and that's going to put in that C wave. So above 1666, that's where wave C is going to be equal to wave A. Again, going out to that monthly max. That wave C is going to be equal to wave A. That's most common. What's next is up there, 1.618, which is at 2154. Doesn't suggest that that's where it has to go. It just is an indication. We have plenty in between to finish that C wave. And it's going to be dependent upon where do we finish this fifth wave that's in motion now. Once we finish minor wave 5, it should in turn finish intermediate wave C, which in turn should finish primary wave C. Actually, no, take it back, primary wave B. Let me go back out here. Primary wave B. And again, yes, I could have an irregular B wave, but I'm not necessarily looking for it. But I think that what we can get is, since this was an ABC down, to form primary A, this should be an ABC up, but it could be a flat. And it falls into that family, so it actually can go irregular, not necessarily looking for it, but that doesn't mean it won't happen, right? We'll know more because the way it's surging at the moment, I don't put it past anything. I mean, we're breaking above 1600. If we break above 17, then 18, and these quick moves, it's going to be pretty wild, because then we are open the door for 1900, for 2000. And we've not been above 2000 since 2008. And just prior to the great financial collapse is when we reached the all-time high that I have at 2308 or 2309. That's pretty wild. And so we can go back and equal that, but you can see where we have for the C wave, 1.618 is 2154. I don't think that's unrealistic, actually, to how quickly we've gotten up from here. But let's count this out, right? We're finishing a C wave to finish a B wave. What comes next is C wave all the way back down, all the way back down, because we'll be looking for a wave C to take out that low. So this is like, platinum's going to be wild. The metals are going to be wild. Like once they're done with these bull markets that we're in right now, the correction is, you can just look at our monthly charts to see, well, that was the great financial collapse. So that's what caused that one. This one was the pandemic. So what could fill in this blank? The debt ceiling, something happening within the government, uh, something happening with interest rates in the bond market, something happening with the dollar. We have a lot of different things that collectively could group together and just knock this thing out of the water and get it to correct. So once it begins, I think we could have some very, very, very strong drops. What's going to initiate that? I don't know. There's too many things to choose from. But once we know, we'll be expecting some serious drops. All right, so that's actually it. So all three, gold, platinum, and silver, over the short to near term, continue to have a, some pretty strong upside potential. And definitively in silver and gold, continuing to go and move towards new all-time highs. Silver's getting there. Gold, every time it goes above the current high, it's making another new all-time high. I think those will continue. And because there are other givens behind gold and silver and how they trade and why they're trading, we're going to have to take it step by step. We're going to have to see why the market or why investors, why everyone is jumping into these products, into the precious metals. Right now, yeah, I think a lot of it is just because of what's perceived is going to happen economically. Okay, I am going to finish this here. And again, all three, I'm still looking for additional upside. All three are kind of building up towards getting close to where they should start to correct again. In gold and silver, that correction should be within like the minute degree. Here, this is also these are minute. So it could be minute one, two, three. It could be a minute way three, so we still have some more. Um, but yeah, we're not done yet. Okay, our next update for the precious metals will be next week.